Hello everyone, my name's Paul Stevens, editor of Short Term Rentals, and welcome to this Rockstars 6.0 webinar on the Price is Right, investment trends in the short-term rental sector, sponsored by Price Labs and Minute. I'm the host for today's session. We do everything here at Short Term Rentals, from podcasts to video interviews, and of course to webinars across our multimedia content. And now for a short video from one of our Rockstars series sponsors. This is Price Labs, a revenue management tool for the short-term and vacation rental industries. So that was Price Labs. Big thank you to them for sponsoring our series. So in terms of webinar guidelines for today, please keep your sound on mute and your camera off if you're not speaking. All of the details will be posted in the chat by my colleagues Joe and Danny throughout. So please do post any questions you have there yourself throughout today's webinar. And finally, a recording will be sent round to everyone after today's session. And next we have one more short video from our second Rockstars series sponsor. This is property monitoring company Minute.
Dear hosts and property managers, hosting can be difficult, we get it. Watching out for parties, making sure your guests have a wonderful stay, keeping neighbors happy, coordinating cleaning and security staff. We see all the work you do every day, and we want to help. Wouldn't it be great to have a co-host? Someone to welcome your guests when they arrive. Remind them about house rules when they're getting a bit too loud. Keep your home safe when they leave. We're Minute, the co-host that helps you care for your home, guests, and community. We come highly recommended. We're reliable and we're eager to help. So let us be your co-host today. With love, Minute.
Another big thank you to Minute for supporting this session and our series. So let's introduce our Rockstars lineup for today, and we're going to kick off, please, with Bryan.
Hi, good morning. This is Bryan Auchterlonie from Destination Capital, based here in Denver. We're an investment bank and an advisory services company.
Thank you very much, Bryan. Delighted to have you on board for today's session. Next up, we have George from reAlpha.
Good morning, everybody. My name is George. reAlpha's mission is to democratize the short-term rental space. Traditionally, the barrier to entry has always been relatively high and mostly unattainable to many people, and we're looking to change that. We want to create greater accessibility for investors and individuals. Through our platform and our AI-driven technology, individuals, investors will be able to view short-term rental offerings on our platform, make investments to be fractional owners for specific properties, and in doing so, they'll get to be part of the investment, profit from operations in terms of quarterly dividends, asset appreciation, and use of the property. So that's what we're here to do.
Thank you very much, George, and welcome to today's panel. And last but no means least, we have Anders.
Hi, everybody. Good to meet you all. My name is Anders. It's afternoon hours in Denmark, sunny Denmark, and this fall break, and great to be able to join this session today. I run a small boutique fund called Founderment. We are investing in early stage pre-seed and seed rounds. Not only, but we look a lot at travel, and within this space, we have quite a bit of experience. I've been building companies myself for the past 20 years and kind of trying to bring those experiences into play as we help other founders on their early journeys of building successful companies.
Thank you very much, Anders, and to all of our panel, big welcome to you all. So let's look at the context behind today's discussion. We're going to kick off with some news involving today's speakers, with George being appointed as president at reAlpha only last month. So delighted to have you on for this, George. And Anders' company, Landfolk, also closing a 7-figure pre-seed financing round back in April. We'll be touching on the acceleration and the slowdown of IPOs and SPACs. We've seen Sonda, Inspirato, Vacasa, and probably more as well over the last year, all going public via SPACs. And we also have Indian hospitality chain Oyo preparing to go public in early 2023. And finally, we'll be delving into some trends and stats throughout today's session, with more than $2 billion invested in funding rounds so far this year, and a total of $4.2 billion in the last 12 months, and that source is short-term rentals. So I want to get a little bit of a sense really of our speakers and their backgrounds and experience that led to what they're doing now as well. So I'll turn to you first, Bryan, as well. You've got quite an interesting background. You talk about sort of you're in advisory and investment in subscale hospitality. You're an advisory board member for American Glamping Association, and also you're at Homes and Villas by Marriott International. Could you just tell us a little bit about your background, what led to these, and what eventually led to Destination Capital's founding?
Sure. No, absolutely. I've got an interesting background. I started in the investment banking space with a company called Houlihan Lokey and did traditional merger and acquisition work for several years, and worked throughout the last great financial crisis, advising owners and investors in large scale mixed use hospitality assets in North American destinations. And during that crisis, as many recall, the uncertainty reigned. There was a real concern for the future of travel, discretionary spend. And at the same time, what was interesting was there an emergence of this alternative accommodation space. I was fortunate enough to join Inspirato to lead their corporate growth in 2015. And during that time, really got an appreciation for what then was called the alternative accommodation space, which is obviously now since changed. Really hung my hat on this. I founded Destination Capital in 2018 after about 4 years with Inspirato to really help owners, help companies invest in three sectors principally: the vacation rental space, the boutique hotel and resort space, as well as this experiential lodging sector, which would include motel conversions, the glamping phase. And it's been a really interesting journey so far, because I've been able to apply a lot of the analogies from what I'll call traditional lodging and that ecosystem to a lot of what is emerging in this subscale, non-traditional alternative space, however we like to characterize it.
Mm. And you mentioned Inspirato. We'll probably be touching on that later, given the company went public earlier this year. But could you expand a little bit on what Destination Capital is, the sort of investments that you're involved with, and maybe also looking ahead, what your longer term plans are?
Yeah, principally what we do is serve as a traditional investment bank in those sectors I mentioned. So again, vacation rental, experiential lodging, boutique hotels. So we arrange capital, both debt and equity, for clients. And in addition to that, we'll take small investment positions in specific opportunities. We're not a large, 7-8 figure investor. But we do like a lot of the opportunities around the self-service travel model. So emerging tech, niche opportunities in PropCo throughout the vacation rental and glamping space, and really scalable opportunities in defensible resort markets.
Mm. I think scale is probably a word that's going to come up quite a lot in today's discussion. So thank you very much for that extended introduction, Bryan. I'll turn next to George as well, because I've got to say, like, having talked to you last week, I think your background is really interesting, and it adds a lot of expertise to today's panel. So could you expand a little bit on your background, what led you eventually to reAlpha?
Yeah, absolutely. I am a real estate guy through and through. Been in the real estate investment and management space for over 15 years, and I'm a licensed Florida real estate broker. I've led or been heavily involved in the acquisition, management, and disposition of thousands of residential homes and multifamily units throughout my career here in the U.S. And my roles have always been centered around maximizing profitability with a focus on growth and scalability. There's that word again, scalability. Notably, I've served as the regional vice president for Invitation Homes South Florida during its earlier days. During my time at IH, we deployed $1 billion, acquiring around 4,600 or so homes. I also served as Chief Investment Officer and Interim Chief Executive Officer for a group called Firm Capital American Realty Partners for a few years. And I came into that role kind of mid-cycle and led the repositioning, management, and the subsequent retail sales program for their U.S. portfolio of residential homes. And most recently, served as a vice president of operations for a group called Transcendent, and was also the managing broker of their two associated Florida brokerages. And at Transcendent, I led the creation and implementation of a property management platform that facilitated the onboarding, acquisition, and management of newly constructed single-family homes throughout the Southeast U.S. So, again, real estate through and through, operations, scaling, acquisitions, and kind of everything in between.
And you've got this experience of building these multi-billion-dollar portfolios, and we've also, as you've seen in the context, explored a little bit about reAlpha and its kind of offering now for the short-term rental sector. Are you able? I appreciate some of these stories were even before you joined the company, but could you expand a little bit on your plans moving forward for this sector?
Well, right now we're in the midst of a Reg A raise with a hefty goal, and we're simultaneously working right now to really build our pipeline of acquisitions over the next several months. I think we're in it's a unique time in the market. I think we're in a unique position, and with so much growth in this short-term space, just over the last couple of years, and continued growth. We're really looking to leverage that and really democratize this space.
Excellent, thank you, George. I've seen a comment from Ron Bartlett in the chat about where can we read your offering proposal. So feel free to drop anything in the chat there if you think that's relevant there. Big thank you there to George. We'll turn next to Anders as well, because again, you've got a fascinating background, and the sort of companies you worked with as well are very relevant to this discussion, Anders. So could you just talk a little bit about that background, and again, what led you to first Landfolk? And yeah, let's start with Landfolk. What led you to that?
Sure. So long story short is that I think I've always dreamt of building companies. I grew up in Nigeria as a kid. My parents worked there within the NGO sector. And I remember as an 8-year-old kid, I decided to start producing ice creams out of my mom's kitchen. And I believe that this was amazing in a 40 degrees Celsius hot environment. And the business worked very well up until the day when we had like 3 days of power cut, and all the ice creams in my mom's freezer kind of went back to a liquid form, and found out that I hadn't quite taken that into consideration. So I've always been kind of fond of trying to build something and create something and start companies. And after I graduated out of the university, I went more the traditional way of building a management consultancy, kind of helping others with their needs in these early days of the shift from Web 1.0 to 2.0, where a lot of changes were happening also within travel. I mean, suddenly we were seeing the TripAdvisors and the reviews, and suddenly the balance of power was changing and so on. I found that kind of fascinating to see. So we advised a lot of companies within that range over those years. But scaling and building a management consultancy doesn't go as fast as I kind of wanted to see it. So it was time to jump into some new adventures. And one of those adventures was a company called guests.com, which was a way to tap into the changes of teams wanting to find creative spaces to meet, to gather, to come together in different ways, something that we've seen accelerated tremendously post-COVID as well, with more flexible working ways and so on. And after 3 years of working with that deal, Airbnb gave us a call and said, hey, we like what you guys are doing. You should join us and help build a new vertical within Airbnb. So we joined Airbnb and built out a new supply vertical under what was called Airbnb for Work, called Airbnb Event Spaces. Was about ready to launch that when the wall kind of came tumbling down around all of us, and their plans changed for Airbnb as well. And they kind of went back to the core of things. That gave an opportunity then to reconsider the cracks that I had experienced in the big platforms like Airbnb, and kind of see if there was an opportunity to unbundle some of the stuff that we didn't feel Airbnb was doing in a very intelligent way. And that then became the journey where we got an old band together around a project called landfolk.com, where we're trying to rethink what a vacation rental should be all about, trying to look at the 80% of those vacation homes that are not on the market and trying to create a home for them where they feel comfortable. And again, I'm giving Northern European numbers here. I'm not sure if these numbers equate to anything that is seen in the US, but at least if we look at the Nordic countries, I mean, 80% of all vacation homes are not being rented out today. So that's the thing we're tackling with Landfolk, where we're really trying to have a new stab at what it's all about, renting out your precious second home as such, and that's going really, really well.
And it's a really interesting sort of route in this into this sector as well. You've come from Guest, which is kind of this meeting booking site as well. I think is it January 2019 you were acquired?
Yeah, exactly.
I believe it was. So you've come from there. You've now moved into holiday homes with Landfolk, and now you've set up Founderment as well. So what led you to that? What were your motivations and goals along the way for that?
Well, I think, as I said before, I think we're beginning to see some cracks in these big OTAs. And I mean, I believe we are stepping into a great unbundling period. And with this unbundling period, there's an opportunity for niches to kind of be successful. And I think many of these big platforms have also kind of like created a paradox of choice for all of us, meaning that we end up spending way too much time just browsing through endless scrolls of homes and vacation places and so on. We end up having what was supposed to be a fun night turns into a nightmare, because you just end up spending the whole evening looking for a place. So that gives room for more niche, more curated, more focused platforms to actually be successful today. And I think that was the opportunity we saw with Landfolk, to kind of move away from the numbers game of having 10,000 or 100,000 or 500,000 homes on a platform, to a more curated perspective that kind of fits with a certain segment of those looking for that kind of holiday offering in a more premium space, not luxury as in Inspirato and others, but in that premium space above just your ordinary vacation rentals that we see quite a lot of on the market today. So yes, I think for me, it has always been about kind of finding those cracks in existing models and trying to see what could we pull out from that crack and create something based on that. And that's what we're seeing with Landfolk, which is one of our investments and main activities in Founderment today.
Very good. Well, we'll be delving more into that curation specifically very shortly as well. I've seen our friend Richard Vorton has raised his hand for a question. Richard, if you want to put a question to our panel, if you could do that in the chat function, and we'll get to that as soon as we can. Thank you very much. So we've already sort of touched a little bit on the sort of segments that are attracting the investment right now. I'll turn back to Bryan as well, because from your background, what are the sort of sectors within the short-term rental space, or even in wider travel and hospitality, that you're seeing the most movement or innovation that is leading to investment?
Yeah, no, absolutely. There's a lot of interesting avenues. Anders mentioned, one I think is very interesting in the kind of, call it the distribution segment of investment, right? And particularly for such a tailored asset like vacation rentals, being featured or distribution or price optimization through such large OTAs, presents some inherent friction, right? From a product perspective and distribution perspective. So certainly that distribution piece, how the product, the calendars, the pricing, the guest experience is best distributed to not just directly to consumers through OTAs, but also through travel agents, right? Very in the luxury space, still a very influential consumer of particularly the vacation rental product. So the second piece that I find still underdeveloped is really the guest experience side, right? There's all sorts of discussion points right now about the self-service component of vacationing in a home rental, most of which has been, I think, decided negative, right? And I think as this ecosystem continues to evolve, on the guest experience side, you're going to find more connections to local communities. As an example, we made a small investment last year in a company called Way, which is a really interesting platform that connects, guests with local providers in a very brand positive fashion. So more examples like that will be interesting. And then finally, I think the third piece that I find interesting is really how companies, investors, operators control the assets that they distribute, right? There's been a long-standing evolution of, do we buy the assets? 20 years ago, Exclusive Resorts, for instance, was buying luxury homes and resort destinations. We've seen in the interim period, the lease arbitrage model, where companies would actually, lease apartments, lease homes, which is still going on today, although with less investment favor. And exactly how operators control the inventory, whether they own it, whether they manage it, will be a deciding factor in how quickly I think this space will continue to evolve.
And you say you've been at Inspirato, a company that's gone public this year. You've had Homes and Villas by Marriott International, which has sort of only in the last couple of years been formed as well, this short-term rental division. So it maybe puts you in a good position to answer this next question about how active do you see the market now, despite the economic headwinds that we're facing, no matter probably where we are in the world?
Yeah, it's a tough position that the market's in right now. I mean, earlier this year we saw massive contraction in the growth equity space, broadly speaking. Mainly this was interest rate driven, right? Higher rates mean lower long-term growth. So you saw, public companies contract. I think year to date we've seen, really depressing performance in public equities. We've seen the cost of debt increase materially. So a lot of headline topics that are, I think, decidedly negative. That said, consumer demand for the product, I think, remains very strong. And the sector itself, vacation rentals, home rentals, is a segment that's not going back in the toothpaste tube, so to speak, right? This is decidedly becoming an asset class, not yet institutional in nature, but clearly an asset class within the broader hospitality ecosystem, which is exciting. And the evolution of that, despite the current market headwinds, will absolutely continue.
Thank you very much, Brian. We've got a really good question in the chat. So I'll just read it out. And Richard says, is investment more focused on actual hospitality or a physical asset rather than tech to run it, and especially in light of the unbundling comment? So Anders, I'll probably come to you shortly on that, but just to reassure Richard that we will get around to that question very shortly. George, I'll come to you next as well, because actually I was just looking at LinkedIn even just a couple of hours ago, and I saw that your company reAlpha had put up this blog post about making the most of your money as well. So I guess looking maybe at the tech side, where are you sort of seeing the investment? Are you seeing it? Do you think real estate is lagging behind on this at the moment?
Yeah, it's a great question. Traditionally speaking, real estate's always tended to kind of lag behind the other industries as it relates to technology. It's another aspect that we're really looking to change, that reAlpha is looking to change. Along with our platform to democratize the short-term rental investments, we've also developed an AI technology that we call the reAlpha Brain. And the brain, it scores each of these assets by analyzing over 25 different factors and attributes within seconds. And it's designed to identify what properties would make strong STR investments. properties that ultimately score high on the brain are then further analyzed and scored by our human component. We call it human intelligence, and then scores from the human are then fed back into the brain, for further fine tuning, further correlations between attributes, constant learning. Currently, our brain, it's analyzed several thousands of assets and counting. And we really believe it's this type of tech that's going to allow us to confidently grow and scale, our portfolio of STR properties and our offerings subsequently. Yeah.
And I hear a lot about investment going into, Bryan was already touching about it, the guest experience and this whole sense of creating unique experiences and memories. How important do you think is the location of the short-term rental properties to that strategy?
Well, speaking real estate, the old saying, location, 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 it always holds true. Locational attributes, especially in the STR space, are key aspects to any investment strategy. Each location, a region is going to be different, but at the end of the day, there needs to be some type of draw or attraction to that area or city, whether it's related to work or play. But you touched on something interesting on that experiential side, and I do think that's a growing component. You're always going to have that want for the traditional vacation destination investments that you've seen, but more so recently, and really it's accelerated post-COVID. It's this want for this experience, whether it's tiny homes, tree houses, themed properties, just to name a few. These are all commanding higher ADRs, higher occupancies than a lot of your traditional STRs, and ultimately it speaks to that drive where visitors want that experience instead of just that temporary shelter.
Thank you very much, George. I'll go on to Anders as well here. You've heard there what our fellow panelists have said there. Where exactly are you seeing the investment right now as well with what you're doing at Founderment from your experience with Airbnb? Are you seeing opportunities for more choice, more innovation in the sector?
No, I'm fully aligned with what George just mentioned there. I think you're totally right, George. I think we are seeing the same thing, that people are willing to pay quite a premium for those more unique accommodation offerings that are coming onto the market today. We see that we have done a bit of investments in this space as well, within those tiny homes that can, without any effect, be placed out into nature and into the woods, and kind of give people that access to the woods while still staying in a comfortable facility and so on. We see lots of fun things happening in that space. And I think, we still kind of focus with Founderment on tech plays and not so much on the actual real estate or the value behind such facilities. And we feel there's lots of opportunities and possibilities within the tech play supporting these different verticals that we're talking about now. I feel in general, a couple of different trends are happening right now. One, I feel we're at a version 2.0 of stuff that was tried like 10 or 20 years ago. An example could be a company like Live Kindred that's kind of trying to find new ways of approaching the fact of sharing your home with others without the monetary perspective of it that Airbnb used to drive. I also feel that we see a lot of fractional ownership stuff happening right now. An example of a Danish company, unfortunately, that we're not part of is called 21 families sharing 5 homes, and kind of like building an ecosystem outside those 5 homes so that those families can also be part of a greater community of other 21 homeowners. And finally, as we talked about before, startups that kind of let you get a more direct access to nature in new ways. Road Surfer, Raus, Landfolk, others are tapping into that kind of appeal that nature has given us, and that we're now trying to find ways of getting access to in new ways, while still kind of wanting that comfortable stay that we tend to like from our hotel stays and so on. So lots of opportunities still out there for investment, and lots of cool startups kind of venturing into some of these areas.
Thank you very much, Anders. I've actually just pasted in the chat there 2 of the companies there that you mentioned, Kindred and Ralph, so in case anyone wants to look at that. Before I go to Richard's question, I've actually got a couple of points that I wanted to raise here. We've got, I think, a slide that we can bring up shortly. But here in the UK especially, we've seen a lot of investment and transactions in the holiday parks and resort spaces as well. So here are three notable deals that I wanted to cite here, involving US-based real estate investment trust Sun Communities, which has bought Park Holidays UK for an estimated £950 million and Park Leisure for £182 million. And then more recently as well, we've seen alternative investment management firm Blackstone agreeing to sell the British seaside holiday resort chain Butlins, very, very well-known brand here in the UK as well. That they're selling that to its former owners, the co-founders of holiday home ownership company Bourne Leisure, for a reported £300 million. So I guess this goes back a little bit to what all of our panelists are saying here, this sense of being out in nature, the unique experiences and memories as well. And we're certainly seeing that investment carry on. It'll be interesting to see the staycation trend and what happens with that over the coming years there. So I just wanted to bring that up. I think if we go back, I wanted to ask, I think there's a good moment there to ask Richard's question. So thank you to my team for bringing that up. Anders, if I just direct this question to you, and is investment more focused on actual hospitality or a physical asset rather than tech to run it, especially in light of the unbundling comment? How do you think you see that?
We see lots of cases. I mean, we've been running through about 500 cases these past 12 months. So they range and they go in all sorts of directions in all of this. I mean, I try to look currently a little bit at tech that's kind of empowering the parties involved. So, I mean, if we look at something like ancillary revenue, which has kind of like been the driver for low cost carriers, is there an ancillary revenue opportunity that can kind of help a party in this existing travel ecosystem? We have a company we're working with called Pere.com that's kind of bridging that connection between restaurants and hotels and kind of ensuring that the hotels actually do get some value when they send guests out to good restaurants in their neighborhood, instead of just offering this advice for free or a $10 tip for the concierge who's offering this. So, I mean, we try to look a little bit at cases that kind of actually not take away value, but bring value into the ecosystem, because we feel that that's what we want to support at this moment. And one is to bring money into play in the existing ecosystem. The other is, of course, to introduce new players with an opportunity to make money in this ecosystem. And that's where we have a little bit of attention. So I don't know if I'm answering your question precisely, but I would say that we see both. I mean, and we look a lot at that early stage. We're looking a lot, of course, at the team and the people and the ability they have to actually make a dent in this space that they're dipping their toes into. And that can take various forms, I would say. So maybe not a precise answer as you're looking for, but that's where we're at. We're agnostic in that sense.
And does either of our other panelists wanted to come in on that point, or if you want to come in shortly, just put your hand up and we can come back to you. Okay, I'll move on to the next question. We might be able to come back to that shortly. But Bryan, I think a relevant point for you here is, how do you actually see the general funding environment at the moment? We talked about the environment, the economic headwinds that we're seeing, but what is that landscape like for the venture-backed, venture-oriented companies at the moment?
Yeah, it's a good question. Most of, you mentioned a couple of the transactions in the UK that involve larger institutional sources of capital. It's important to remember that most of the operators and companies in the vacation rental space, despite some of the big headlines, remain smaller venture-oriented companies, right? And so it begs the question: what does that market look like? We've seen. I was just looking at some data this morning from PitchBook. We've seen deal volume and total investment throughout the venture ecosystem decline markedly compared to 2021. I think both deal volume and assets invested are off by about half from last year. I guess the question is, what did last year look like, and what how is that decline relative? Even being off by half of last year, 2022 is still one of the top funding environments in all of the last 10 years. And so when we kind of broaden the aperture to say, okay, how are these declines relative to historical investment periods, it still remains relatively stable, right? Despite some of the uncertainty. Obviously, late stage venture, right? So companies that are looking to exit to, a larger institutional investor, public markets has become a lot more challenging. We've seen some of the notable companies that went through the SPAC process, Sonder, Vacasa, all down 60+%, year to date. So not a pretty picture in the public markets, but certainly, companies in this in the sectors that have defensible opportunities that are, I think appropriately balanced, as George mentioned, between profit and growth, still have good prospects.
And you mentioned there the sort of SPACs you've seen, and I was just looking at the figures earlier today. We've got Vacasa, which went public at the end of last year, was trading at 361 from a 1025 high. Inspirato went public. I think they're on 221 from a much higher high than that. Sonder 224 from 1011 back in February. We know Selena apparently is due to go public later this week as well. So why are these SPACs seemingly tanking right now? Why are they performing not as well as expected, or not to the level that many would have thought they would have done?
Yeah, well, without going into too many arcane details of the SPAC process, nothing, in my view, nothing to do with the fundamental health or growth prospects of any of the companies you mentioned or others who've gone, through the SPAC process. The, unfortunate markets into which these companies entered became very volatile very quickly, right? So if you look at the timing of when they all went, I think, February, March timing was just about the time the public markets deteriorated. And so, I think over time, this will be a good learning experience for folks and exactly how and when to access, public capital versus say private equity. And also, as our sector matures, the options for exiting, will become a lot wider, right? So SPAC process will certainly not be going away anytime soon, but as our vacation rental sector and other emerging niches of the hospitality product spectrum emerge, so too will those exit options, right? And public markets won't be the kind of ultimate exit.
You quote their exit options. I want to look at the opposite end of our entry options as well. So I'll turn to George for this one. Thank you first for that, Bryan. George, what sort of investors, or what sort of investors, what sort of investors are looking to get into the short-term rental space? Where do you think they're seeing those opportunities, and where are they becoming attracted to this sector?
Yeah, good question. And to echo some of Bryan's comments, it's definitely a challenging time for many of these SPACs from a capital markets side. But from an actual short-term rental growth side, it's been very interesting. I mean, it's a very highly fragmented $1.2 trillion industry. It's still somewhat in its infancies. The rise of these platforms like Airbnb and VRBO have really helped kind of to grow and shape kind of where a lot of it's going. But the growth has continued even through the pandemic and post-pandemic, and people are taking note. I mean, even with some of the economic downturns, August figures are showing total demand rose 19.8% year over year. And that in itself is up just over 16% versus pre-pandemic 2019 baseline. Revenue, same as of August, revenue growth 23.1% higher year over year in August. And that's 42.9% higher than 2019. So I mean, it's hard not to notice that, not to see that from an investment standpoint.
Thank you very much, George. We'll come back. I know we've got some more points to discuss. I'll move on to Anders first as well, because you've got a slightly different perspective, Anders. You're focused primarily on pre-seed and on seed funding rounds, as you've done with Landfolk. So in putting on your Founderment cap as well, what do you see as being the environment for startups looking for pre-seed, seed financing at the moment? Are they looking for innovation or the sort of rethinking solutions in travel, shall we say?
Well, I think we're pretty lucky because a lot of pre-seed and seed funds have been raised these past few years, and these guys need to spend some of that money on something, right? So I think there's still kind of lots of good opportunities to have successful early rounds. But I would say that those doubling rounds from a pre-seed to a seed is being challenged a little bit, even at that stage right now, meaning that some companies have to accept a lower jump in their valuation from that first round to their second round, with people, of course, naturally using this current market situation as an excuse for that not to be exactly where we all hope for when we invest at that early stage. I would say that there is a strong focus to see companies have some sort of path to profitability. I mean, some sort of a backup plan that they can pull out of the drawer if things don't go as fast as they had expected. And that, of course, is kind of a challenging thing to ask for at that early stage of a company's life, because you at that point just want to kind of like try out all sorts of things. But I think it is something that more investors want to know, that is there a fallback option once they go into these companies, and is there some kind of opportunity for this company within a 2, 3, 4 year period to actually run a profitable business. And that, of course, puts kind of a little bit of challenges onto some of these early startups who dreamt about kind of just be given a shitload of cash and just be giving it full speed ahead, right? So that's one dilemma that I'm seeing in quite a few conversations currently. But at a pre-seed, at a seed round, I mean, I still see lots of money there to be spent into helping these startups go forward. Once you get further than that, we see exactly the same things as Bryan and George also mentioned, that there is a general slowdown. And I mean, I can look at my own stocks, right? They're down with an average of 40%. I'm sure many others on this call would have experienced something in the likelihood of these same numbers, right? And therefore it's natural also to affect this industry, and it might not make totally sense. I mean, look at Airbnb, right? I mean, I've been following that since the IPO with good reasoning, and I mean, they have a quite solid business, but still it seems to be having a difficult time kind of moving from where that's at right now, around $100, $110, even though their numbers are solid. So I mean, I think there's just kind of an overall economical situation in the world right now that's putting a lid on things that could otherwise develop positively. Maybe that opens some opportunities for some good deals out there. I'm sure Bryan and George see such opportunities in the horizon.
Thank you very much, Anders. A reminder as well to our audience, please do post any questions you have for our panelists in the chat, and we will certainly try and get around to them by the end of today's session. Bryan, I'll come to you for this next question as well. I think it was when we were talking last week, and we'd seen this Hilton commercial, which had kind of, you could say it's been a little bit inflammatory towards the short-term rental segment, and it kind of got me thinking a little bit about how far do you see the short-term rental sector being, how far away do you think it is from being able to attract these sort of investors, these institutional, these private equity firms from entering the sector, and maybe what do you see holding them back from doing so?
Yeah, good question, Paul. I mean, really, to say nothing about, Hilton or other majors, right? I mean, everyone has a product to sell, right? And they're going to try to do their best job at selling that. I think, unfortunately, for those not active in the sector, I think the days of a uniform hotel experience, going down to the lobby with your family, overpaying for, breakfast, and, a crowded, resort pool, and, having mom and dad and kids share 2 queen beds is certainly, days of the past, right? The home sharing, home rental environment has, I think, as George mentioned, democratized the way people want to travel, right? And their needs for travel, right? In terms of how they consume restaurants, how they consume concierge services, how they consume, on-site amenities or not, right? It's been a very powerful revolution. When I think of these questions, Paul, I come back to kind of where I started at the beginning is there is a well-trodden path here, an analogy in the traditional lodging industry of how these assets are developed and zoned and entitled, right? So, in the hotel space, you've got commercial assets that are highly liquid, right? In most cases, there's owners and developers of those assets, there's operators of those assets, there's capital dedicated to investing in those asset classes. I think we're just seeing the beginning stages of this STR vacation rental segment emerge as an asset class. You've seen some really positive tailwinds in that space, but still there's a long way to go to create that underlying legal framework across jurisdictions to ensure that investors have the security of the long-term viability of the cash flows derived from these assets, right? So it's a very right now it's unfortunately a very patchwork approach, jurisdiction by jurisdiction, and where assets can be invested, where they can't. Certainly during the pandemic, for instance, we saw a number of jurisdictions say, hey, we're oversaturated with tourism, we need more workforce housing, and suddenly vacation rentals became a topic of workforce housing in some distant connections. So we're going to see kind of fits and starts of that conversation as the asset class emerges, and I think it's a natural progression, but we still have some ways to go on this asset class being wholly institutionalized.
Thank you very much, Bryan. And probably the same question really to you, George, as well. How do you assess the roadmap for institutional investors turning to short-term rentals as an asset class? Do you see, like very much what Bryan was saying, that compliance and the regulations, do you see it being a case of standardization? How do you view it overall?
Very much so. To echo Bryan's comments, it's still very much a little bit like the wild west. It's very fractionalized. And as that standardization starts to come into the space, from compliance, from guest service, from kind of the full picture, I think that's when you'll start to see that comfort from those institutional investors really starting to come into the space, starting to look at it as somewhere to invest. I think right now everybody's watching and taking note of what's going on. But I think the standardization is absolutely key. And from a compliance standpoint, I mean, it's no different than, some of the, single family home world from back in the day. And even now you still see that, even though that class has started to really become more institutionalized, you still see a lot of pushback from municipalities, from HOA communities, limiting, restricting rentals. So it's always something that I think will be there, but it just becomes a more standard part of the diligence process.
Thank you very much for that, George. I want to get round to all of you as well before we finish as well, and it's probably what most people have come here to listen to as well, and it's these sort of sectors or segments that we're expecting to see the most, or what are ripe for investment moving forward as well. So Anders, let's kick off with you. Is there any sort of segment or emerging asset class within this space that you see as being ripe for investment moving forward?
I think I've shared a couple of the areas that I pay special attention to right now, and I definitely feel that there is an opportunity to, and I'm going to go back to that again, to look at what the big guys are not, the big guys meaning the Booking.coms, the Expedias, the Airbnb, what is it that they're not doing well, and kind of do that well, do it better than what they're able to do it. I mean, these are big mean machines. I mean, they run a big ship, and that makes it difficult for them sometimes to actually get it all right. And I think I'll give an example. We are a proud investor in Plum Guide. Plum Guide is also a curated marketplace that has kind of taken the top 2% of homes. I don't know if they say 1, 2, or 3% today, but top 2 or 3% of homes from top 50 platforms around the world, and kind of created like a curated marketplace for them, right? Because then you just know that you're in an environment where you can find that kind of top quality homes. And I mean, that is just something I think is a natural development right now, that as these platforms have grown bigger and bigger, it opens up opportunities for small people to step in and to deliver some sort of value. Personally, I'm also very fond of some of the other initiatives happening. I mean, slow travel as a movement, I find that super inspirational. I love what the old design hotels, Klaus Sendlinger, is doing with his visions of slow travel. I find new ways of us kind of getting connected as we travel in new ways. I mean, I love some of their visions around kind of having dinner at a long table with people that are a little bit similar to you, so that you want to have that interaction with them. And so I feel there's still lots of small niches that can be unpacked and create lots of value within travel. And I'm just excited by the fact that people continue to kind of find these niches and unpack them in new and interesting ways, with different value propositions on the table from each of them. So still lots of opportunity out there, and love even the people chatting with me here today and sharing some of their ideas on this call, and other such ideas coming out of travel, because lots of opportunity to make great businesses within this industry.
I'm sensing a lot of enthusiasm and optimism through the screen here with you, Anders.
Yeah, that's good.
I wonder if Bryan has the same sort of sense of optimism. What segments are you seeing as being ripe for investment moving forward?
No, I'm an entrepreneur, so by nature I'm optimistic. But I share Andrew's view on the guest experience, right? So unlike a traditional asset where it's a box of say 200 hotel rooms and you're congregating in common spaces, on these more disaggregated assets, short-term rentals, you may have, as an operator, you may have 10 homes in San Diego or Park City. How you provide that guest experience or connection to the community, right, for your guests is I think it's a really interesting question, how much you provide to provide that feeling of authenticity, right? Travelers who are staying in short-term rentals, vacation rentals, homes, who are making that choice to not stay in more of a standardized box, want that more local experience. They're choosing to have maybe a more self-defined travel experience. So that's the first point. I think in the second point, is how investors, this has come up a couple of times, how investors view property in this instance, right? You've had a couple, in the urban space, a large company called Central, which has a partnership with Iconic Capital, actually buying and owning multifamily, buildings in gateway cities. You've seen the same thing with Dart Interest acquiring and developing what is basically a horizontal hotel outside of Orlando called Evermore. Does this become the new norm? I don't know, but certainly it's an interesting way to control the assets. I think the innovation around how operators really control the inventory that they're distributing, right? And is that through just being a good operator and having that sticky customer, meaning the homeowner, or is it actually partnering with capital to go develop it yourself and actually control everything? That whole conversation is still very much up in the air.
Thank you, Bryan. I'll leave the last word as well to George. What are you seeing for the future as well?
Yeah, again, to echo Bryan, I agree. And to piggyback off that a little bit, I think optionality as it relates to the asset itself. For example, when you're targeting these short-term rentals, if we're looking at not just a single family home or a single home, vacation home in an area, but let's look at a duplex, triplex, quadplex that still all kind of constitute residential homes, still fit that short-term rental bucket, really gives a bit more optionality, more exposure. As an example, if you've got a duplex, let's say that's 2 bedrooms on each side, each one sleeps 5. You've got a 2-bedroom listing that sleeps 5, but you've also got a 4-bedroom listing that sleeps 10. Your optionality, your marketing, your exposure increases. And I think having that optionality from a real estate selection standpoint is also going to be key for future ADR, for growth, for occupancy and whatnot, as you're acquiring short-term rentals.
Thank you very much, George. We've had quite a few questions going to come in. I'm going to just read them out, and we're going to have a 2-minute countdown at the end as well. So if any of our panelists want to just piggyback on that and give our audience some response. I'd encourage you to do it in that 2 minutes at the end. But so Greg Linhoff asked, how important is new purpose-built short-term rental product versus converted properties in attracting institutional interest as a valid asset class? Richard Vorton again, are we likely to see the large managers such as Vacasa, Sykes, Travel Chapter, Aways, which is now on the market as we reported just a few weeks ago? We did an interview with Henrik, the CEO as well in Vitoria, Malaga a few weeks ago, consolidate and be further investable. And Meredith, you ask a very, very relevant question on fractional ownership, trendy or part of the future. Stay tuned. We've got a couple of slides I just want to run through first. So a big thank you to all of our contributors, to Bryan, to George and to Anders. So we are back on Tuesday, the 1st of November at 4 p.m. GMT for our next Rockstars webinar called Timeshare, Fractional Ownership and Membership Clubs Making a Comeback. We've been delighted if you could join us then, and you can sign up in the chat now as well. So Meredith, I think you'll be wanting to tune into that one. Tickets are also now available for our Recharge event in Lisbon as we bring together urban innovators at the cutting edge of hospitality, of real estate and living. It takes place on the 23rd and the 24th of January 2023. So I hope as many of you can join us there as possible. For opportunities to work with us, please do contact my colleague Katie. Her details are on screen for you now. Big thank you again to Price Labs and Minute for sponsoring our Rockstars series and session. As I just mentioned as well, we're going to keep the session open for another 2 minutes. If our panelists want to jot down some answers to our audience's questions, if our audience wants to take down contact details for them, please do that now. Do contact us via our various channels as well. A big thank you again to all of our speakers today, and of course to everyone who tuned in. We'll see you all next time. Thank you very much, everyone.